What's going on, motherfuckers? Throwing together a quick video. In this video, I'm going to be going over AMC in full, dissecting the chart from the macro perspective of AMC, zooming all the way into the 1 hour, tracking where we are right now, fractally, where we stand. Everything looks great. You know, everything looks great with SPY. SPY is very close to seeing new all-time highs. Gold just saw new all-time highs. Silver, macro breakout. Bitcoin, 45K, pushing it right now. Hasn't seen that since early 2022. Altcoins are ripping. Everything looks good across the market. We're in a complete bull market. And with that being said, let's jump into the video, starting with AMC's macro as always. And like I said, I'm going to dissect the chart, starting with the macro perspective from IPO to present day. And then we're going to be zooming in a little bit at a time until we get down to a 1 hour time frame of where we currently are. So we'll start here from IPO, where you have your January and June equivalent in the green and yellow. And this is one macro, bull cycle, bear cycle, and then the January squeeze is the start of a new macro, so bull cycle, bear cycle. So you have your January and June equivalent, the green and yellow, your January and June equivalent, green and yellow, the V-shape and the macro break, the V-shape and the macro break, and that's where you get into the downtrend. Also keep in mind the 200 EMA is on the chart in yellow. You could see in the previous bull cycle, pretty much riding right on top of the 200 EMA the whole time until you get into the downtrend, which is where you break below the 200 EMA. And same thing over here, the 200 EMA where the January and June squeeze are on top of it. You get the V-shape, the macro break, and then into the downtrend now is where you break below the 200 EMA. So in the green box right here, breaking below the 200 EMA, climbing back up, you cross it, and this is where you find your descending resistance, your macro resistance. And then over here, same thing, breaking below the 200 in the green, and then crossing it to find your macro resistance. This resistance is our halt line. And then into the red, another cup crossing the 200 to the downside, and then to the upside, and then up to the resistance. Over here in the red, same thing, the cup, cross the 200 to the downside, back to the upside, and then back up to the resistance. And then you get into the blue, which you have this V shape that you see here. You don't cross the 200 EMA at all in the blue. And then you come down, curl up, you come down, curl up, and then drop to your flat portion. So I'll zoom in a little bit. And this is where you touch the 200 again. So all the touch points on the 200 EMA are perfect all the way through so far. So now dropping to the flat portion, the first iteration here, choppy, gap up, 3 peaks. And these 3 peaks is where you cross the 200 EMA, and it's right under the resistance. And over here, same thing. Drop down to the first bottom, the first iteration, choppy, gap up, 3 peaks, poking above the 200. And then getting into the U move, which breaks you out of the resistance, also crossing above the 200 EMA. And then over here, same thing, breaking out of the resistance and crossing the 200 EMA. And then the final iteration, the W with the tri-peak, your second and third bottom. And then over here, your second and third bottom. So, and then along with that, all of the levels, the green, red, blue, flat portions, all the same. Even the bull cycles are relatively similar. The first bull cycle, the bear cycle, and then bull cycle. All the levels are pretty much the same. The touch points, the intersection points of the 200 EMA are the same. The flat portion, the movement of it is the same. The touches on the descending resistance, the macro resistance are the same. And then your flat portion in the previous cycle starting in 2020 and then concluding in 2021 when we broke the resistance and squeezed, compared to the current cycle starting the flat portion in 2023 and approaching our macro resistance in 2024. Although I do think we're going to be seeing that sooner. So that's it for the macro. So now we're going to start zooming in a little bit at a time. So the next slide we're going to be looking at is just the downtrend now, the green, red, blue flat portion. So excluding the bull cycles now, we're going to just be looking at the bear cycles of AMC, which take you pretty much down to zero. Not to actually to zero, but right above, where you're trading at the end of AMC's macro is right on top of zero. So now we're going to zoom into that. So here's the downtrend, and again, the 200 EMA is here again. All the intersection points are the same. So you have your green up to the resistance, green up to the resistance, the red up to the resistance, same thing. The blue, you don't cross the 200, you don't cross the 200, and then the tri-peak, three peaks here, poking above. The U move breaks you out of the resistance, which is a fake out, and then you crash back through it to your second and third bottom, which is where we are now. Again, 1 year for the previous flat portion, and it's lining up for 1 year again in the current flat portion. And this flat portion takes you to your all-time low landmark, which is where you finish the macro. AMC's macro ends with an all-time low landmark before an uptrend, and then you break the macro resistance and squeeze, which is where we are now. So this is the exact same chart I just showed you, just without the boxes now. I think it's a little bit more clear. It's not as cluttered. So again, just showing you your descending resistance of both cycles. It's the exact same trend, the exact same touch points, the exact same intersection points of the 200 EMA. The flat portion movement is the exact same fake out that you see here, and then ending your macro at your third bottom all-time low. And again, the flat portion 2020 to 2021 versus the current 2023 to 2024, we're approaching and also approaching our macro resistance, our macro halt line. So that is that. So now we're going to be zooming in a little bit more now into the flat portion itself. So right here, this white box compared to this one, zooming into that now. So here it is, dropping down to it, choppy, gap up, 3 peaks poking above the 200, drop down to it, choppy, gap up, 3 peaks poking above the 200. This is really just a W here. So your first leg down, the lowest leg down, bounce up, come down, high or low, it's a W. And then over here, same thing, first leg down, lower than the right leg, up, down, high or low, and then you get your fake out of the resistance, also crossing the 200 EMA, and then pulling back into the resistance here for your second and third bottom. So your second bottom, your tri-peak, which I mentioned was right here, which we were never going to come back up to this trend. The next time that we do come up to this trend, we'll be breaking above it and squeezing. So that's your tri-peak right here, and then your third bottom all-time low breaks slightly lower than the second bottom that you see here. And it's right pretty much at the new year is where you hit your third bottom all-time low. And same story here. So your second bottom here and then your third bottom all-time low is a little bit lower than the first, and right at the new year approaching our macro resistance. So that looks good. Now getting into the final iteration of AMC. So zooming in even more on the flat portion and looking at this final iteration from the fake out and then the pullback in this W, and then over here, same thing, the fake out and the pullback in the W here. So zooming in on that now. So there's your fake out, come down, you get this little cup on the side right here that you see right here, dropping down to your second bottom into the tri-peak, and then your third bottom all-time low breaks a little bit lower than the first, and then the same thing over here. Second bottom, tri-peak, and then third bottom all-time low. And now we have the 20 and 50 EMAs on the chart, and I'm just showing you where we are tracking wise right now. Since we completed the tri-peak already, we already got the third bottom all-time low. The next time the price action meets the 20 EMA is right here, right before you gap up over the macro resistance, which is where we are right now, fighting for the 20 EMA. And I mentioned multiple times, this does not look like much here, but this is an uptrend. We got the third bottom lower low than the second that we were looking for, and now we are uptrending, and we have met the 20 EMA, and we're battling to claim it. Again, that's right at the new year where you find that. Now we're going to be zooming in even more into a 1 hour chart on where we are, which is the third bottom all-time low, and then the uptrend from it to the 20 EMA versus where we are over here, the third bottom all-time low, the uptrend to the 20 EMA. So zooming in on this now, this is the channel. So this is your third bottom all-time low in 2021, and this is our third bottom all-time low in 2023. So from that, you bounce up, and that is where you find the top of the channel, that first rejection point right here, from which you pull back to the support, and then you climb back up to the top of the channel where you reject again. Over here, same thing. reject off of that, a couple of bounces here on the support, wick through it, it's never going to be the same, reclaimed it, back up to the trend, back up to the top of the channel, where you reject it again. That's your chop zone now. So now you're chopping here below the channel before you claim it. And then right here, chopping below the channel, fighting, wicking through the channel here, trying to claim it until you finally do, which is January 15th, back up to the top of the trend, and then you get the pullback. Now, yesterday was a fun day, 10% in the green. I said, all day yesterday I was talking about we will be coming down to 705, talking about today. And that's exactly what happened. We came a little bit lower, but closed the day at 703. This is the pullback from January 15th, back to the bottom of the channel. Yes, we broke below it slightly. What we're looking for now is there's two ways this can play out. Theoretically, we could gap up tomorrow. Now, I'm not saying for certain that we are gapping up tomorrow, but theoretically, we already hit the top of January 15th. And today we got the pullback and the V today. Theoretically, we could gap up tomorrow to the macro resistance, or just straight line to the squeeze. But I'm leaning more on the case where tomorrow we potentially see a down spike at open, and then we reclaim the channel. It'll probably be a pretty flat, boring day, but it should be green, where we reclaim the channel here and close somewhere in the mid $7 range, which is this candle and this candle that you see right here. Going into after hours, that would complete the channel, and GameStop has earnings after hours tomorrow, which I'm expecting GameStop to see green on those earnings, and probably green in a big way, and AMC likely will follow suit. And I would imagine that if GameStop did get that gap up tomorrow, we will be getting this gap up right here, which is the end of the macro. Now, potentially we get this price action here, which takes us to the wedge, which would be right here. If we did get that gap up, it would take us to the wedge, and then that would be that breakout retest. That would be somewhere $13 to $15-ish. For GameStop, it would be somewhere 24 to 30. It's possible we see that. It's also possible that that gap up, if we do see it tomorrow on GameStop's earnings, will be the kickstart of the squeeze. And what I mean by that, the other scenario, is that we just straight line. I mentioned multiple times, these resistances are not the same. The previous cycle and the current, there were multiple breaks above here in the tri-peak even. There's no halts on this trend whatsoever. So this is January 15th where you gap up. This is the move I'm talking about, the potential $13 move. I'm leaning more on the side where as soon as we break this trend, it's just going to be a straight line. Considering this is our macro halt trend. And we've seen the volatility behind this trend line. In July, in March, and August when we got halted, there is some very volatile price action waiting for us behind this trend. So that is pretty much the channel. And I think that was everything. I went, through the entire macro. So the big picture itself, from IPO, the bull cycle, the bear cycle, the bull cycle, the bear cycle, ending with the flat portion, which takes roughly a year to play out. The levels are all the same. The 200 EMA intersection points are all the same. The downtrend is the same story. I went through that. The flat portion, I went through this. We're approaching our macro resistance, macro halt line. If we're dead flat here, we meet it January 3rd. I think we're going to be meeting it sooner. So that's the flat portion. The final iteration, all the EMAs look good here, meeting the 20 EMA, fighting for it currently and looking for this gap up. And then the channel looks great, phenomenal. This pullback today was exactly what I wanted to see. I actually repositioned myself, sold my contracts end of day yesterday at the top at 750 because I was looking for this pullback to 705. Ended up pulling back a little bit lower than 705, but closed right around 705. And now tomorrow, the two scenarios that we're looking for: number one, we just gap up pre-market, which is on the table. Number two, we see a pretty boring day, kind of sideways, but in an uptrend, and close somewhere mid $7 range, and then we would gap up on GameStop's earnings. Now, we don't have to gap up on GameStop's earnings. It's possible that we continue in this channel here until we meet the resistance. But I'm just going based off of micro landmarks, which, you know, I've said it a million times. I'm saying it again, take it with a grain of salt. Tracking on the micro can be very tricky, but that's the channel. So really quickly getting into the indicators, you know, volume profile looks great as always. OBV, slight bounce. RSI still sitting at 30, oversold for fucking half a year on the weekly. And then you have, you know, just looking at the weekly here, your second and third bottom, all-time low, second and third bottom all-time low. This looks fucking amazing. And we're green so far in the week. I expect that to remain the same. Volume profile looks good. OBV looks good. And that is pretty much for that. And then the Fibonacci spiral, this looks even better to me. I love this chart. So, you know, starting from your low point, your third bottom all-time low in January 2021 to the top of June, and then starting it at IPO. Very interesting touch points here on the spiral. So the first touch point is where you drop down to the original flat portion. Then you get your January and June squeeze, which rejects right off the top of the spiral, also halted there. And then into the bear cycle of AMC, every time we've come up to the top of the Fibonacci spiral, this is also our macro resistance, our macro halt line. We've been halted. So the macro halt line, the resistance of that also coincides with the top of the Fibonacci spiral being halted every single time off of this. Here's the breakout and dropping down for the retest, your second and third bottom all-time low. This looks amazing. So that's it for AMC. I think I covered everything. Looks great. You know, expecting upside. Really nothing else to say there. So for SPY, for S&P 500, I covered this in my last video. It's been relatively flat up here since Friday, but we will be breaking this trend at 460. I mentioned the levels of overhead, 464, 471, and then all-time highs is 480 and change. This looks good, and I've mentioned multiple times where both times that AMC and the rest of the meme basket squeezed, SPY was at all-time highs. So January 2021, right here, this first yellow box, SPY is at all-time highs. June 2nd, the second yellow box, SPY is at all-time highs. So while the meme basket was squeezing, SPY was at all-time highs. And like I previously just mentioned, SPY will be breaking this trend at 460 and seeing new all-time highs. And macro-wise with AMC, that's aligning to happen at the same exact time, which makes sense. So this looks good. And then really quickly, GameStop's macro, all the same shit here. Starting, ending with your all-time low landmark, your bull cycle, V-shape, and then the downtrend, again, to your all-time low landmark, the bull cycle, the V-shape, and then your downtrend to your all-time low landmark. I mentioned when the bottom was in, we'd be Ving out of this very quickly, which we did. But I think there's more upside to be had here still. Running this yellow trend line across the landmarks that we're looking for, all three of your third bottom all-time low, your first and second, very similar formation. And the line across is your macro break line, which I mentioned multiple times for GameStop is roughly $24. So being that GameStop just hit its third bottom all-time low landmark, it's possible this uptrend is not completed yet to get back up to this yellow trend, which is sitting at roughly $24. Which would be this move here. So coming up to $24 and then pulling back to get this W move. And then right there is your macro break, and it's a straight line to your squeeze. So I'm looking for upside on GameStop's earnings tomorrow, potentially seeing $24 to $30. And then at the same exact time, that aligns with AMC, where we are at the end of the channel, the January 15th V. We just did it today. Now we just have to reclaim the channel, and then we'd be getting the same exact gap up, and then the same exact pullback W type move, and then that's it. That's the end of everything. It's just a straight line from there. Which again is lining up with everything. Bitcoin is ripping right now, 45K, hasn't seen that in 2 years. Altcoins are ripping. Ethereum Classic, I think, is 20 plus again, heading upward. S&P 500 is about to see new all-time highs. Gold just saw new all-time highs. Silver, macro breakout. The list goes on and on. I went over a few tickers in my last video, but really this applies to, generally speaking, the entire market. So looks good. No complaints whatsoever. This pullback today was exactly what I wanted to see. I repositioned myself today, expecting a pullback to 705. Tomorrow, like I said, Potentially, we have a very slow, choppy uptrend to mid $7 range, and then potentially gapping up after hours on GameStop's earnings, along with GameStop gapping up, or we just gap up pre-market. I'm leaning more the case where we would be gapping on earnings. It just makes more sense to have some kind of a catalyst. So with that being said, that is everything for the video today. Everything looks great, no complaints whatsoever. So that said, if we get some crazy price action tomorrow, I'll be making another update video tomorrow, potentially live after hours. And if we gap up pre-market, I won't be going to work. I'll be live all day. So that is it for the video. Everything was fucking good. Bullish as fuck. I'll catch you guys in the next one.